Hello there traders, this is Steve Miley, the market chartist for FX Explained, and here we're going to take a look at the some of the foreign exchange markets in here. We're going to take a look at what we call the risk currencies in here, the commodity currencies, and these amongst the majors would include the New Zealand dollar, the Australian dollar, the Canadian dollar. You can take a look at the link below the video in here and it will take you to an article written about the different types of currencies, safe haven currencies, risk currencies, emerging market currencies. So take a look at that article if you want to learn some more about the different types of currencies and the forex market. So, but in here we're going to take a look at these risk currencies. I'm going to start off with our poster boy in here, really, the New Zealand dollar in here, which is completely continuing this uptrend that we saw from early November, re-energizing that in the second half of November and continuing just to make new multi-week, multi-month, multi-year highs in here. If I zoom out now, go to the daily chart and you zoom across in here, you'll see we're at the highest point right now. So it's all the way over here. We're taking out peaks from over here and getting close to these peaks from June 2018. So a really strong performance here by the Kiwi, the New Zealand dollar. And that's primarily being driven by this overall risk on theme. Okay, so we've got the overall risk on theme helping all the commodity currencies higher, the New Zealand, Australian, Canadian dollars in here. And you're seeing the equity markets staying very strong as well, the stock indices. We're in this risk on theme. And that's primarily being driven by those 3 vaccine announcements we've had throughout November, driving markets higher, plus this Biden bounce, a positivity coming from the fact that we have Biden coming into the presidency, coming into next year, early 2021. Also, the data overall is remaining, global data remains to slightly beat consensus in here. So overall, the recovery from COVID-19 seems to be continuing, seems to be happening, and there's a lot of positivity around that. The other thing, particularly for the New Zealand dollar, while we're just talking about, is the fact that New Zealand dollar in here, remember in Asia Pacific we had a trade deal done about a week or so ago in here. That was a very positive development, particularly for New Zealand. Remember, a big exporter into Asia, particularly to China, dairy products, particularly powdered baby milk that they sell into China. It's a big export industry for New Zealand, and so opening up of those markets, a trade deal is positive. And also don't forget the New Zealand government in here did very, very well in how they dealt with COVID-19, so eradicating it very, very quickly in here. So obviously their economy less damaged in here than we've seen from a lot of other major global economies. So New Zealand dollar continues to surge higher in here, and no reason to doubt this. Technically, we're running up ahead of this trendline support. We've held this trendline support on numerous occasions. We've got this this longer term trendline support that comes up from November, way ahead of that and above that, and just pushing back higher. We took out a psychological barrier. As I say, we've already looked at those multi-week, multi-month, multi-year highs in here that we've taken out. So New Zealand dollar just pushing through bigger resistances in here like they're not even there. So upside pressure is very much intact there. And if we go and look at the Australian dollar in here, also looking very positive. So taking out over the last few days in here, these peaks in here at 73.34, 73.40, but probably more importantly the September peak. These peaks over here put in respecting this peak in here from mid-September at 73.45. We got up through there. We've been consolidating through the US Thanksgiving holiday on Thursday and then popping higher again already overnight going into Friday. Aiming now at this 73.82 level, and critically maybe to test today the 74.13 cycle high in here from late August. So real threat to push up to there and maybe an acceleration above there. So Aussie looking firm as well. And we're going to round off in here with the Canadian dollar. Now Canadian dollar sitting down here near the lows through the Thanksgiving holiday, holding at these supports in here, 129.82.72 from back in earlier November, and we held exactly there at 129.82 over the past 24-48 hours, but look, nudging back down lower, kind of respecting this downtrend line in here and looking like we're going to get another break lower. Remember when we broke down to 129.24 here, this was the Pfizer break lower on the 9th of November, okay? So when we got down to there, if we zoom across in here again and go to the daily chart in here, you'll see not only do we take out this 129.90 low from September, we took out this low in here from the very end of 2019 at 129.48. Now that placed dollar CAD, when we got down over here to 129.24, its lowest level since all the way over here since October 2018. So this is an important low in here. If we can get below there, we can challenge this low over here as well, which is down at 120, where are we in here, 129.00 I think, or maybe just below 127.82. So real downside threats, downside risk in here for dollar CAD in here. So remember, that's Canadian dollar strength. Dollar CAD down, a strengthening Canadian dollar, and we're looking for that to come through as these risk currencies remain solid, remain strong in here. Now I'm going to say to you, please don't forget to hit that like button and subscribe button on YouTube. I'll be back with you very soon. Until then, have a great trading day. This has been Steve Miley, the Market Chartist for FX Explained. Thank you so much for watching. Now, if you like what you've seen, please do hit that like button and don't forget to subscribe to our YouTube channel. And, as always, have a great trading day.